So you're ready to buy your first house, and let's face it, you're a little bit nervous because you've never done this before, and you want to avoid the big mistakes. You want to know how much all this is going to cost you, and lastly, you just want to be in the best loan, but you don't know what the best loan is because we've got a lot of choices, right? We've got conventional, we have FHA, we have VA, we have USDA. In this video, we're going to talk about what 80% of first-time home buyers choose because it ends up being the best deal typically, and I'm going to show you why this loan provides the lowest rate. It allows you to have more debt, which allows you to purchase more home. It allows for the lowest probably monthly mortgage insurance. And lastly, it provides for the highest amount of seller concessions, which lowers the actual cash you're going to write at closing. So it does a lot of things that are great. I'm going to show you maybe a disadvantage or two. So if this is of interest to you, let's kick off this rodeo right now. I'm 𝐂𝐿𝐓, I'm the Mortgage Patriot on your side, nestled here in the hill country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So another great one as always, because I'm going to talk about the number one loan that first-time home buyers use, and even second-time home buyers, but mainly first-time home buyers. And there's a reason for that, which I'll tell you later. But before I get into that content, please hit the like and subscribe. It really helps me bring up my content on the YouTube algorithms, because I really try to put a lot of work into this and help educate you and get you to where you're feeling comfortable about pursuing your first home. So, and as an example of that, here is a video that I did recently, is the 5 things you must know or must do in 2025 when you're buying your first home. So that's a companion video to this video right now. Watch that one afterwards if you would, and that fills in the gaps of what I'm going to be talking about right now. So let's get into that content right away. So as we stated up front, you typically have 4 choices in terms of loan options that cover virtually all your situation. And what are they? They're the conventional loan, the FHA loan, the VA loan, and the USDA loan. And guess which one is the best for you as a first-time home buyer? The good old-fashioned FHA loan. Why is that? Well, let's just start with the VA loan. That's just for active military and retired military. So if you don't fall into that distinguished category, which most of us do not, that loan is not even available to you. Now, the USDA loan has its advantages. It's zero down. It's for mainly rural areas, but it's highly restrictive in that it doesn't allow you to buy much home. So would you believe that if your household averages about $80,000 of income for the year, you can buy about an $80,000 house in a conventional loan and an FHA loan. But in a USDA loan, you're only allowed about a $240,000 house. So once home buyers really understand that, and I pointed out to them, they never choose a USDA. So this video, the rest of the video is really going to talk about the advantages of the FHA loan versus a conventional loan, because that in most cases will be your only choices. So the first big advantage of the FHA loan is frankly, it's just cheaper, meaning your monthly payment is going to be lower. And we all want that, right? And it comes in 2 different ways. One is you just get a lower interest rate. Compared to a conventional loan, currently, the spread between an FHA loan and a conventional loan rates are about 0.5%. So right now you can get, for example, about a 6% FHA loan if you have about a 680 score or somewhere around there, versus a conventional loan, which is going to be about 6.5. So let's take an example all the way through this video. We're going to take a $300,000 house purchase with a household income of $80,000. Those will be our 2 assumptions. With those 2 things in mind, your payment on an FHA loan is going to be about $175 lower per month versus conventional. Why is that? Because again, you have a lower interest rate, and the other thing is you have a lower monthly mortgage insurance. What is monthly mortgage insurance? Well, you only have to put down 3.5%. They're saying, hey, we want to have this, we want to make sure this is insured. So they charge you on a monthly basis mortgage insurance. Conventional loan does the same thing. But again, if you have a 680 score or lower, your monthly mortgage insurance on your conventional side is much higher. So the lower interest rate and the lower monthly mortgage insurance combine for about $175 per month difference between FHA and conventional. That's not a small amount. Another advantage of the FHA loan is it allows you to have more existing debt in place already before you buy a home. So what does that mean? Let's go to the example of that $80,000 household income. With a conventional loan, outside of your housing payment, you're allowed about $800 in the form of, car payments, credit card payments, maybe student loans, for example, whereas the FHA loan allows you to have about $1,100 of existing debt in those same formats of those same obligations. And for example, if you have student loans but you're not paying on them, they calculate that in terms of your debt to income. So just because you're not paying on student loans, they do calculate that in your debt to income. With a conventional loan, it's 1%. So if you have $30,000 of existing student loans that you're not paying on, a conventional loan is going to assess $300 to your debt to income. Whereas an FHA loan will only do 0.5%. So that same $30,000 of student loans that you're not paying on, they'll only assess $150 against your debt to income. So the FHA loan allows more debt. Great advantage. So the third advantage of an FHA loan, and this is a huge one, is that all down payment assistance programs are connected to FHA loans, whereas not all down payment assistance programs are connected to conventional loans. So it's much easier to get that down payment assistance, obviously, if you're in a FHA loan. And what does that do? Of course, that brings your cash to close way down. So there's programs that we talk about all the time. Look at this companion video right here where I talk about down payment programs I did recently, and to get a feel for that whole situation, because you're going to want and need assistance on bringing that cash to close as low as possible. And the FHA loan being connected to the down payment programs allows for that. Giant advantage. So the fourth and biggest maybe example of an advantage from the FHA loan is seller concessions. And what are seller concessions? Seller concessions are just the closing costs that a seller is going to cover for you at closing, because they want to try to get this deal done. They want to sell their home. So on a $300,000 house, for example, in an FHA loan, you're allowed 6% seller concessions. 6% of $300,000, that's $18,000. On a $300,000 purchase, at least in the state of Texas, all your closing costs, down payment included, is going to approximate about $20,000. So if you can get maximum seller concessions of 6% on an FHA loan from the seller back, you're going to be cutting a check for only $2,000 at closing. Compare that to a conventional loan, which only allows a 3% seller concessions. So 3% of $300,000, that's $9,000. Out of $20,000, you're going to be writing a check for about $11,000 in the case of conventional loan. That's quite a difference. In fact, look at this companion video, which went viral last year, where I talked about buying a $300,000 house and only writing a check for $1,000 total. And so that's a strategy combining the FHA loan, the seller concessions, and the down payment assistance program. When you use all three of these, you're going to really minimize the check you're going to write at closing. That's a giant advantage on the FHA loan. So why would there ever be a reason to not use the FHA loan? Well, here's the big disadvantage, and that's private mortgage insurance or mortgage insurance. We talked about how the government, since it's giving you a 96.5% loan, is going to assess you insurance along the way. Now, conventional loan does the same thing, like as we said. In fact, it's even more expensive initially, the conventional loan, than the FHA initially. However, the disadvantage of the FHA loan is that number never goes away. That mortgage insurance doesn't go away. So on a $300,000 purchase, for example, you're going to be paying about $137 every month for 30 years. Whereas on a conventional loan, even though you might start off at, let's say, $180 a month on your mortgage insurance per month, it will drop off as the equity of your property becomes 20% or more. So I'll repeat that. The FHA, they call it the mortgage insurance, does not go away. On a conventional loan, it does once your home reaches 20% equity. So that's a big disadvantage. So that's why a lot of people choose sometimes, if they can put more money down, you're not going to want to use an FHA. But if you're trying to minimize your cash to close, FHA is the clear choice. So I hope this was all of great help for you. Believe it or not, I do answer my phone and respond to emails and the comments in the section. So please do all those things. Call me if you would, or contact me at 210-317-6514. Let's see if I can help you out. I'm Kevin Fagan, the Mortgage Patriot, on your side.